Hey, 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 what's up, everybody? It's your girl Richelle here for our regular podcast on Thursday nights at is it 7 p.m. Yep, 7 p.m. Eastern Standard Time. The three power moves to become your own bank is what we are teaching on until the end of July. And then we're going to shift to probably the good, the bad, and the ugly annuities in August. So we'll be going into some really good teaching on Thursday nights, and we expand the teaching. So it's not always the same thing. So if you do come on, you say, hey, wait a minute. So are you expanding this or is this kind of the same presentation? Nope, nope, nope. We're expanding our presentation so that we're growing, you're growing. As we grow, you grow. All right. And these are amazingly free. Okay. You can't beat that price. Get the education. Beloved, I wish above all things that you should prosper and be in good health as your soul grows. So we believe that the financial literacy is a part of what we need to grow our souls. Jesus said that where your money is, there your heart is. So your money is connected to your heart. So when your money is low, a lot of times you can feel bad. Like, I don't know if I can take care of myself, right? So this is a part of good health, good wealth, and prosperity. Okay. So I'm talking. Let me just make sure that we are doing good. We're live streaming, and I'm checking my phone to see if everything came up, is coming up. Yep, I see it. All right. Yay. Hey, there I am. I see myself there. All right. I'm going to say hello to everybody. So, guess what? This information is free, but I want to ask you to pay it forward. Hit the like button, share, make a comment. That lets the algorithm know that you believe that this is valuable information, and it allows us to spread financial literacy and strengthen our community. Okay. Now, I had some people register, so I may have some people jump in. And if I do, if you click the link and jump onto the Zoom call, you'll be able to ask questions and participate one on one. You can also ask questions here on Facebook. Can you see? So I can see if you type a question in the chat on Facebook. Now, being as though I am the host, I am the presenter, I am the usher if we was in church, I'm going to stay focused on the presentation. And then at the end of the presentation, I'll come back and answer your questions. Is that fair enough? All right, so without further delay, let's get started. Oh, you know what? Before I do that, I am going to see if I can get this out to the community. Let's see if it'll let me share it in a couple of groups. Let's see if I can share it a couple of places. This also gives time people to so people can see Richelle is live and they can make a decision that they want to join me. So I'm going to share this. We have several different groups. I don't know if you can see that on my phone. First group is the 3-step challenge to become your own bank. Our goal is to build that group up to 100 people and then start Be Your Own Bank challenges where we just stay with you for at least 3 days and really go into a deep dive. The second group is the Ethnic Women's Financial Advisors Coaching Group. That is over 200 women of color who are coming together. We're doing podcasts, we're doing conferences, we're letting each other know about job opportunities and business opportunities. We're staying connected in a sisterhood and letting God grow our sisterhood. We are a minority inside of a minority. So we are in financial services. And let me tell you something, it is segregated. Whether they know it or not, there's a group that go over there and they learn all the high end stuff. And if you're not with them, so we decided to just be open and transparent and share our knowledge and boost and each other's business. Okay. The third group I'm going to share is in the Rama Financial Solutions group. That's my personal agency group. So all of my agents are over there in that group. And I think that's going to be it. All right. So hopefully we have some chime ins. And as I see that you chime in, I'll wave to you. Hey, how you doing? So wave back. Okay. If I say hi to you, that means I can see you. You popped up on my screen. Say hi back. My grandma Belle used to say, even a dog will wag his tail or bark at you, acknowledging your presence in the room. Okay? So come on in the room and let's acknowledge each other's presence and let's grow and learn together. Okay? Let's go. All right, so I'm going to share my screen with you. Okay, 3 power moves to become your own bank. Let me make sure I'm recording. Wait a minute here. Am I recording? Let me just make sure I'm recording, y'all. I think I'm recording. All right, well, either way, no problem. All right, so listen. Let me make sure. Did you know that there are 3 power moves that everyone must take in order to become your own bank? 3 power moves that I discovered. So I have been on this journey of learning how to become my own bank since the early 90s. I started in the life insurance industry in 1992 with Globe Life Insurance Company. I started in a small African American agency in Washington, D.C. And at that time, all we had was whole life insurance. So we didn't know all the different products that were available. All we knew is that the Federal Employees Group life insurance was going to decrease in value and that we had to give the employees something else, right? At one point in time, we had a universal life policy that we told them they could save money into it. Wasn't big interest rate, but it was just like a little savings on the side. And that was the extent of our knowledge about life insurance. I went to something called the Flagship Club back in 1990, I want to say 7. And when I went, I was the only agent in our company that went because of some challenges and some attacks that came on our agency. So when I went by myself, I was sitting there with the other top 10 agents, and I was number 7 in the country. They all made $100,000 a year or more. I had only made $35,000 for the year. So I asked the other members of the round table, what is it that you're doing that I'm not doing? And then they looked at me and then they sized me up and they said, okay, since this is not your first year, this is your second year, we're going to tell you what we're doing. First of all, you have a contract that's so low, you're not able to make money. Second of all, your products are so low that you're not able to make money for other people. That began my journey on learning how to be my own bank. All right. So since then, I've hit the $1 million round table, done all kinds of wonderful, wonderful things. But the most important thing is being able to share these things with my community because I found out that as African American agents, we were being redlined, just like in real estate, where they said you cannot sell those products in certain communities. They were doing the same thing with financial products that they were doing with home mortgage loans, which saying you can't sell those high-end products in the African American community. And when I found out that that was being done, I got pissed off. Okay. And so my heart has been thriving And that is my biggest why. We just came out of segregation. I know you guys are like, well, Jim Crow ended in 1964. Well, in the financial industry, I was there in the 90s and it was still going on. So, what does that do? That leaves a whole group of people, women, brown people, people who are not in those inner circles. It leaves all of us out going around the back door of the restaurant. Now that we can get in, we're trying to get in, right? So that is my biggest reason why. That's why I am so passionate. Roosevelt, I saw that you came in. Welcome to the Be Your Own Bank workshop. Keep yourself muted. And I promise that at the end of this, about 20 minutes in, you'll be able to raise your hand and ask questions. But I want to admonish you to take notes. All right. Sometimes listening to new financial language can be like drinking from a water hose. So I want you to take copious notes. So at the end of the presentation, you will have some meat and not just dessert to take along with you when you go. Okay. What is it that you expect out of this masterclass, right? Most people come because they're trying to grow their finances. That's the bottom line at the end of the day, right? You want to increase your finances. Well, if that's the reason why you came, you're in the right place with the right person. My goal tonight is to show you products and services that you can put your money into, not lose a dime, and grow your money exponentially. The Bible says 30, 60, and 100-fold. Okay. Of course, that's going to take time. All right. But yes, if that's your why, then you're in the right place. Our goals for each client is to, number one, make sure you have at least 3 months worth of savings for emergencies in the bank, financial security. Number two, make sure you have at least 50% cash flow, which means your bills are not more than 50% of your take home pay. Number three, financial independence. That means you have enough passive income, which means you don't have to go to work for the money. The money is sitting there working for you, paying you an income. So you have enough passive income to take care of your basic expenses. So if your expenses are $2,000 a month, your passive income needs to be $2,000 a month. Everything after that is gravy. Financial independence. And step, what is that? 4, financial freedom. That means that your passive income is 100% higher than your basic expenses. So that means your basic expenses are $2,000 a month and your income is $20,000 a month, 10 extra income, and you should be somewhat free. Now, if you're out of control, which means you spend it faster than it comes in, I'm going to cut to the chase. You need an annuity because you spend it so fast, it doesn't even have a chance to come in. So if you're out of control, we can skip to the end of this presentation and I'm just going to say, look, you need an annuity so that way when you spend it, at least you know the first of the month something else is coming in. I know y'all can kind of see what kind of person I am. We use A+ rated companies that are 100 years old. A+ with Moody's, Standard and Best, and a Standard and Poor's and AM Best. These are the life insurance rating industry. We don't mess around with companies that have a B rating because I have been in the industry and seen them go out of business and take my clients with them. So I'm not playing around. You should make sure you only work with A rated 100-year-old companies too. Quick mindset question. What kind of money personality are you? What kind of money consciousness do you have? Are you an investor, which means every dollar has to earn a dollar? Are you the kind of person where I only put my money into things that are quality? I only put my money into things that are an investment. I do not put my money into things that depreciate in value, right? So, do you have an increase, an abundance mentality, or do you just throw your money to the wind? Okay. Now I could cut this all the way down, but I'm not going to take time and do that. But when you put your money into food that's bad for your health all the time, you need to check yourself, right? If you put your money into food that gives you the increase, both physically and mentally, right? Or do you put your money into bank accounts that pay less than 1%? So that your money is depreciating in value as long as you sit there? Or are you looking for higher growth? Are you putting your money into things that pay 5%? 5% should be your target goal focus for the growth of your money. Are you a investor mindset or are you a saver? The Bible says, go to the ant, thy sluggard, consider her ways, how she's hustling right now during the summertime, snatching crumbs off your kitchen floor and running them into her people and stacking her crumbs so that when the wintertime comes, you can't find that ant because she's sitting on a big pile of crumbs that will last her straight to next spring. Are you a saver? All right, where you take 5% to 10% of every dime you earn and set it aside for emergencies? Or are you just blowing through your cash as fast as you can get it? Are you a spender? Are you the person who gets to the grocery line and you don't know your bank balance and you swipe this one? Okay, well, let me pull out that one and swipe it and swipe it. And you're not even keeping track. You're not financially aware. You've turned off the light. Boop, it's all dark. You're not looking at your bank balance. If I asked you how much money you have in your 401k, you couldn't tell me. How much life insurance do you have? You couldn't tell me. You have got to wake up. Like Spike Lee said in School Days, wake up. Look at your bank balances. Look at your 401k. Financial awareness is the beginning of financial independence. We have to change our mind to think like a bank. What does that mean, Richelle? Banks leverage loans. What does that mean, Richelle? That means banks make money by charging interest on loans. What does that mean, Richelle? Well, who do I have on this call? Let me see. Hi, Roosevelt. Let's just say I went into the bank and deposited $50,000. And then I just let it sit there. I didn't need it. 2 weeks from after that, Roosevelt went into the bank and he wanted to buy a mid-sized Mercedes. So he took out a loan for $50,000. Let's say Roosevelt's credit was shot to poo-poo. So they checked his credit and it was only 650. Say it's 650. So they're going to charge Roosevelt 15% interest on my money. The bank is going to take my money and loan it out to Roosevelt and charge Roosevelt interest on my money. The bank can do that 10 different times and recycle your money to 10 different people. So then Don Zella comes, Roosevelt pays back the 50,000 plus the 15% interest. And then Don Zella comes in and the bank loans Don Zella my money too. And they'll do it over and over again. So how is it that we can think like a bank? It is the ability to borrow money to make money, which means you take the money and the bank loans it to you at 3%, and you take that $100,000 and make 10%. Y'all picking up what I'm laying down? You borrow money from the bank at a low interest rate. You take the money that you borrow from them and double the value of it. Get a double return. So you pay back the bank their interest, and then you pocket 10%, 15% interest. If you can recycle a loan and make money off of loans, your balances will never go down to the line of zero. That is the concept of being your own bank. Now, if you didn't get that, I'm not blaming you. Because unless you grew up in a wealthy family, you didn't get that in your subconscious mind. Because we were taught the borrower is slave to the lender. Okay, Richelle, that's in the Bible. You're not going to tell me that's not true. There's a condition on it. The borrower becomes the slave of the lender if the borrower can't pay back the loan. The borrower is the slave of the lender if the borrower doesn't know how to make more money on what he borrowed. Remember what Jesus said. He said, one servant took God's money and made a 30% return on it. The other servant took God's money and made a 60% return. But one joker took God's money and buried it and didn't make any money on it. Y'all remember that parable? And what did Jesus say? You wicked servant. I gave you all this money and blessings and you got zero in return for it. You don't know how to be your own bank. Right? So if you can take money and make more money from it, if you can multiply what you got, now you have the mentality to be your own bank. Okay? I thought that was good. All right? There are holes in every retirement plan. The first hole and the biggest hole is taxes. On a tax deferred plan, 401k, 403b, IRA, thrift savings plan, as soon as you touch it, you're going to have to pay the piper. You're going to have to pay Uncle Sam 30% or more. 5% average for your your state taxes, 22 to 25% for your federal taxes. And if you're younger than 59 and a half years old, a 10% early out penalty on top of that. So no matter how you slice the cake, if you make over the poverty level and you're putting money in a 401k, your tax bill is 30%. Wake up. Okay? So if you can plug that hole, you're going to put 30% more money into your account. Fees. You're going to see brokerage fees. Your job has a fee. Uncle Sam has an extra fee. If you can eliminate the fees out of your retirement account, you're going to put an extra $20,000 to $150,000 back into your account. This is not my opinion. These are statistics. The average person pays $20,000 on the low to $150,000 for 20, 30 years worth of fees that come out of your account. The third thing is low growth. Anything that's growing at less than 5% interest is depreciating in value. What do you mean, Richelle? Let's say you buy a drink this summer and it costs $1. Then you come back next summer and that same drink costs $1.05. What happened? The cost of living went up by 5%. So if your money is sitting in the bank and it's only growing at 3%, that means your money depreciated in value by 2%. Money sitting in the bank that's not growing at 5% interest or more is depreciating in value. Now listen, don't you wish they would have taught us that in elementary school? They taught us the number line and they put the little negative numbers, a zero, and all the little positive numbers. If they would have applied money to it and showed us that if our money is not keeping up with the cost of living, that our money is depreciating in value, how much wealthier would we be had we got this consciousness in the kindergarten? Think about that. The last thing is stock market losses. The stock market takes your account back down to the line of zero. That means you have to work to put the money back into your account to break even and then hope that the stock hits 15, 20%. 15 to 20%, a lot of times is not enough to make up for 2 years worth of losses. So suppose you could have an account that never went down to the line of zero. That means you're not trying to make up for the money you lost. It only took stock market gains and it took zero losses. Picture that. How much faster would your money grow if you could get stock market gains and take zero losses? So where do you put the money? Do you go to a bank? If you go to a bank, you're going to get low growth, first of all. I've yet to see a bank that pays 5% interest on anything. If you do, text me or email me at ramafinancialsolutions.net and please tell me what bank it is because I haven't seen it, okay? And they're going to tax you on that. So the little 2% that they're paying you, and they charge you taxes. What about on your job? They're going to tax the bejesus out of your 401k. If you have a 401k right now, try to cash it in and see how much you get. I double dog dare you. Just try. Call up your HR and say, if I cash this in, how much cash am I going to get? If it's $100,000, you're going to be lucky to walk away with $76,000, $60,000, depending on your tax bracket. You will cry crocodile tears, okay? Sometimes we call that the tax manifestation bucket, okay? And we haven't gotten to the fees because there's fees in it too. What's the best place to put your money? Okay, I'll skip to the chase. A fixed index Roth IRA. An index universal life insurance policy. A whole life, high cash value whole life. I'm not talking about that poo-poo I was selling back in 1992. Now, it's okay because it covered people who were sick and couldn't get life insurance. That's a whole nother category, right? But I'm talking about healthy people who can actually own a piece of the rock, which means you buy a life insurance policy, you're actually buying shares of the life insurance company. And you know it because they're sending you a dividend statement and they're paying you dividends inside your policy and they're giving you the ability to borrow the insurance company's money and keep your money growing. So you have the privileges of being an owner of the life insurance company. I'm talking about that. I'm not talking about them burial policies. that they tried to pass us off on back in the day. Okay. This is the tax-free bucket. Trust, irrevocable trusts are tax-free. Irrevocable. Don't make sure don't not revocable, okay? Irrevocable. Roth at age 59 and a half, the money comes out tax-free. Would you rather pay taxes on a seed, which means you pay taxes on what you put in, or would you rather pay taxes on the harvest? You got an apple seed, you pay taxes on that, or you got an apple orchard. You're going to pay taxes on the orchard or the seed, right? So get yourself a daggone Roth or life insurance policy with a Roth inside of it. Oh, a permanent life insurance policy that has a Roth or tax-free retirement plan inside of it. What is that? An index universal life. So that's the tax-free bucket, okay? All right, so I'm not gonna go. Well, I got all these stories about people who didn't do this and they lost. Okay, so OJ did this, and when he came out of jail, Forbes magazine reported that he was earning $600,000 a year in passive income, and that the Goldman family couldn't touch it because it was coming out of life insurance annuities. What? Life insurance cash value and trust. Irrevocable trust that couldn't be penetrated. So OJ was sitting pretty good. And then he passed away. And guess what? The Goldman family still can't touch it. Only the children or whoever's named on the trust are able to access all that cash. OJ did his thing now. But my man, I love this man with every fiber of my head, or every hair on my head. Chad didn't do it. Aretha Franklin didn't do it. Prince, Purple Rain, he didn't do it. When they passed away, half of their estate or more went back to the flipping government, probate, and the people who owned their rights. Listen, I don't care if you have $100,000 in a 401k and that's all you blessed got. Take $3,000 and go down to the flipping law firm. Sometimes it's only $500. Go down to the flipping law firm and get yourself a will and a trust. Put your life insurance in there. Put your annuities in there. Take care of yourself. And if you don't know how to do that, reach out to me at RaymaFinancialSolutions.net. Okay? Power move number one. You said you was going to get it. Power move number one, I already told you. It is the ability to leverage a loan. So what is the first thing you have to do in order to be able to leverage a loan at the bank? Get your flicking credit score up. So power move number one is getting up to 700. A 700 credit score equals 6 figures buying power. An 800 credit score equals $1 million in buying power. Because you sure cannot leverage a loan if your credit score is below 700. You're going to be, as the Bible says, the borrower is slave to the lender, because they're going to lend you money with a variable interest rate, which means they're going to charge you what they want. You ever see fees, monthly fees on your loan, where every month they add a fee? There's a late fee. It's a charge. That's where the life you're going to live. But if you can get your credit score up, you're going to have power to attain money you don't have right now. Number two is being able to leverage a life insurance loan. E.F. Hutton created this policy in the 1980s called an index universal life. I call this the life insurance war. You have in this side of the ring, you have A.L. Williams, ding, ding. He's jumping around with the American flag. On this side of the ring, you have E.F. Hutton, ding, ding. They both come together and have a life insurance war, and they created two concepts. One is buy term and invest the difference. The other one is not public knowledge. It's buy permanent life insurance and invest the difference in a fixed index Roth IRA, which is a tax-free retirement built inside of a permanent life insurance. Buy permanent life insurance and invest the difference. So the rich Caucasian men stuffed millions of dollars into it. Millions. It was a tax shelter for the rich. You don't believe me? Google it. Pick up your phone and ask Google. Say, what is the rich man's Roth? And you'll find the history. Don't believe me? Believe Google. The rich man's Roth. The other, now this equity banking concept is not new. Back in the early 30s, Walt Disney, J.C. Penney, the list goes on and on. They were doing it with dividend paying whole life, which means when you buy a life insurance policy, you own a piece of the rock, or you own a piece of the life insurance company, so you become a shareholder. So they pay those dividends into your life insurance policy, and they give you the ability to borrow their money, which means Disney, according to the PBS documentary, go look it up. You'll have to watch the whole documentary though. According to the PBS documentary, Disney had a $2.5 million whole life policy that he took out when he first married his wife and children. He got the concept to build a park in California in the 1950s, but he went to the banks and the banks all turned him down because in the 1950s, amusement parks were full of gypsies and snake oil salespeople and people who would rip you off. They were not the kind of place where you would really want to take your children at night. Okay. So Disney said, whoa, I own a whole life policy. So he borrowed $100,000 from his life insurance company, and his dividends stayed in the policy. His principal kept growing, and he borrowed it at about 3% interest, 100,000. When Disney opened, they made, he had a $1 million policy. Please excuse my facts. And when Disney opened, they made $2.5 million the first day. So he paid back his whole life policy plus the 3% interest. And he noticed that his cash value went on steroids because he kept last year's principal and interest and never lost a dime. It never went down to the line of zero. Then he stacked it on top of this year's principal and interest. And when he paid back his loan, his cash value went on steroids. It's called infinite banking. So they've been doing this since the 30s or more, maybe longer, maybe since the beginning of life insurance. I wouldn't know, but that's, hey. So leveraging a loan is power move number one. Your ability to go to the bank and borrow money to make money. Your ability to go to the life insurance company to borrow money to make money. Your ability to borrow from a life insurance company and live off their money and keep your money growing inside of your policy. That's power move number one. Here's an index universal life example. Here's one of my clients who retired. She had $200,000 in CDs at the bank. Y'all know them about, yeah. And she said, Richelle, I just learned that when I die, the bank's going to freeze my account and charge estate taxes, and they're going to give it to debtors. I don't owe that many people, but I sure don't want that to happen to my grandchildren. I said, Miss Mary, you're in good health. You in here taking line dance with me. You do Pilates. You're good. Let's apply for an IUL. Let's take that $200,000 and roll it into one. It'll be a one and done. And let's see what it does. It created an immediate estate. So the 200,000 turned into $588,704 instantly. She was like, "Oh, now my grandchildren be just right." That's right, because it's going to go to them probate free and tax free. She said, "Well, I need some money for myself too now." I said, "That's good, Miss Mary. This is going to be paid up. One and done. You never have to put another dime in it." I said, "Can you wait 5 years and just sit and let it cook?" She says, "Yeah, I'm fine." I said, "In 5 years, that $200,000 is going to pay you $1,200 per month for the rest of your life. But not only that, your cash value is going to be sitting there growing in the policy because we're turning on a guaranteed lifetime income rider. This is a rider. So you're going to look back, and at age 69, you're going to have over $72,000. At age 79, you're going to have over $216,000. Guess what, Miss Mary? You got your money back, as the Bible said, 30, 60, 100-fold. And you secured an extra. Hey, what's that? Your mortgage is only $800 a month. You're already doing good. Now you can go see the whales. You know what I'm saying? Go travel. Hello. Oh, I'm not done. It has living benefits on it. So that if you become terminally ill, you can surrender the death benefit and take $389,000 and some change and keep the rest back for your children and grandchildren. If you needed long-term care, you can surrender a portion of the death benefit. It would pay you out over $6,744 a month for 4 years. You can surrender the death benefit if you were contracted with cancer, heart attack, heart disease, a stroke, kidney disease. $360,000 if you became critically injured, $360,000 and some change. So it has living benefits, Miss Mary. So that way, if you want to leave $300,000 to your grands and surrender your death benefit and take $200,000 for yourself and liquidate it, now you can go into that expensive, high-end assisted living facility instead of struggling to live on Social Security and asking your kids to take care of you and you getting on their nerves. Right? Okay, so what if you have a 401k and you're like, "I'm tired of this thing losing money. I need to retire in a couple of years, and this 401k thing is just not stable for me. Plus, they're going to charge me all these taxes. And when I take the money, if I take the income, the lump sum disappears. If I take the lump sum, the income disappears, and they're both taxed 30 to 50%. It reminds me of the Wiz, Michael Jackson with the scarecrows. You can't win, you can't break even. You know what I'm saying? So listen, we said diversify and put your money in a fixed index strategy. Let's see if we can take the same amount of money you were putting in that 401k and put it in an IUL. Well, guess what? If one of you passed away, the other one would be a millionaire. And guess what? At age 64, it's going to pay you out over $5,122 a month for the rest of your life. And you can dip into it and be your own bank. 800,000, 1.2 million. So while you're taking that income, you can always dip back into your cash value. And if you became really ill, cancer, heart attack, stroke, you were in a car accident and suffered head trauma, severely burned, you could liquidate that death benefit for over 800,000. Hey, looks good to me. Rich people understand leverage. Wealthy people, I'm not going to say rich because there's a difference. Wealthy people understand the ability to borrow money to make money. It's a way of life. If you have at least $100,000 in cash assets, wait a minute, hold up, stop. I'm not talking about you have $100,000 in your 401k because you don't own it. If you have a 401k, you don't own it. Your job owns it, and the federal government owns it. You have no liquidity, and you have no control. And you have no say over your money. Your money is in money jail. If you have $100,000 that's not in money jail and you don't need it, y'all picking up what I'm laying down, then you can qualify for premium financing. Check it out. This is a life insurance policy that's automatically tied to two things. It's tied to a trust and it's tied to a bank automatically, which means it's impenetrably tax free. Well, let me show you. Here is a client who decided, hey, you know what? I've got this $100,000 and I want to turn it. Whoa, it's not gonna let me blow it up. I have to readjust this. I want to turn this $100,000 into $1 million worth of assets. How can I do that? Well, what we did was we took out $25,000 per year and we spread that out over 5 years. This is called the 5-year retirement plan. This particular trust and this particular bank matched this person. So every time they put in 25,000, the bank and the trust put in 25,000. You're only allowed to put it in for 5 years, then you must stop. After the 5th year, the bank will put in all of the money. So the bank continued to put in 50,000. At the end of the 10th year, the 11th year, this person took a guaranteed lifetime income of $30,177 for the rest of their life. They only funded it for 5 years. So this is a person who took $125,000 one time and turned it into $30,000 a year, the equivalent of having $460,000 in assets. And because it's in a trust, and because it's coupled with a bank, and because it's in a life insurance policy, it's tax free. Now, again, if you have 100,000 or more in cash assets, not in a 401k, you don't need that money, then you could qualify for this especially retirement plan. So what is that? Leveraging a loan. Okay, power move number 2. Power move number 2 is called a fixed index account, FIA. Now the A can stand for an account, or the A could stand for annuity. Okay? What does it mean, a fixed index account? Fixed describes a guaranteed interest rate, otherwise known as a floor. So when the stock market crashes, your money sits on the floor and you don't lose a dime. Some of the floors are 0. Some of the floors are 1%. Us at Rama Financial Solutions have a special way that we structure our fixed index accounts so that your floor is 2.25%. So you're earning more than you would earn at your bank when the stock market crashes. But when the stock market goes up, your money is indexed. What does that mean? Index is a group of mutual funds or a group of companies that you get to earn an average of. Okay, so the S&P 500, the Russell 2000, the Global Balance, the Hang Seng, the Bank of America funds. There are many, many indexes. So that means your money stays ahead of the cost of living increase. Remember, we told you in the beginning, you have to have your money growing at 5% interest or more. The only way you can get that consistently is by using the stock market, right? So you have to have the stock market involved. But when you have a floor, that means you don't lose a dime. Your money never goes down to the line of zero. Y'all picking up? So fixed has a floor. Index is the stock market. Now you've got the A. The A can be a growth account. A growth account pays two ways. Two ways. Bonus money. Ooh, I love bonus money. That gives me a little tingle down my back. I love me some bonus money. It's just a gift. Hi, I like you. Here's some money. Walk. And you know I'm a girl, so you know I like it when it's a gift of money. Okay. So bonus money and stock market interest. Put a 2 in the chat. Bonus money and stock market interest. Don't you like that? And no losses. Woo, that thing sounds unreal. Well, honey, it's been around a long time. I was just telling a friend of mine from high school, from the community, just before I got on this call. I was saying, I talked to a 75-year-old Italian doctor. He is a retired doctor. And he came on my Be Your Own Bank. He said, Richelle, my father gave us those fixed index accounts way back when we was such and such. One time I had one pay a 15% bonus. I got one that pays 10% bonus. And we put them all in trust, and I'm the trustee. I was like, that's some unfair crap of poo-poo right there. You mean to tell me you and your family been doing this for the past, 80 years? And we're just finding out about it this year? Honey, well, look. When a slow one get it, they got it. That's why I'm preaching this all over the flipping globe, okay? So power move number 2 is get yourself a flicking fixed index account. So the A in account means account growth and bonus money, and the or the A can mean annuity. What is an annuity? I talk to people and they go, oh, what is an annuity? Simple. Ask Google. An annuity is simply taking a lump sum of money and turning it into a lifetime income. Here's the story of my mama. My father was shot in a laundromat at the corner of Addison and Sheriff Road in Chapel Oaks, Maryland. He was an off-duty police officer. My mother and I was there. We watched my dad get shot in the chest. Boom, laid and died, bled out right in front of me and my mother. My father worked for the DC police force only 1 year. He came back from Vietnam, went into the police force, worked 1 year. My father only put 1 year's worth of money into that annuity. My mother got paid from the time she was 22 all the way up till right now. It's July the 3rd. Mama's got another check at age 80. From age 22, when I was 1 year old, to age 80, today, the 3rd of July. What's this, the 3rd of July? That annuity has been paying my mama. There ain't no way on the blue side of heaven you can put 1 year's worth of money into anything, I don't care, and get paid for 50 some odd years. Do you understand? And I got paid $450 a month on that same annuity When I went to the University of Maryland, I had to file my grades and say that I had a C or better and I was in college, and it paid me $450. 1 year's worth of money. That's the power of an annuity. The power to never run out of money. Do you want to never run out of money? Well, then you need an annuity. Don't let them jokers lie to you and say annuities are no good. They're saying that because they want to make money from the stock market. They want to take your money, put it in the stock market, and not care whether you lose it or not, because they're still going to get paid whether you lose it or not. Go watch Trading Places and look what Eddie Murphy was like. Oh, that's how it works. Yeah, honey. They got annuities. Them rich folk, they got annuities, baby. All right, am I going to go over this? I don't know if I feel like it. I think I feel like ending this because when you preach and you just feel like that's the end of the story. Yeah, I think I made my point. I do. Okay, so I'm not going to go into this, but I will do this because I promise you 3 power moves. The third power move is to put your assets inside of a trust. If it's $500, the trust, I mean, and your family doesn't have to pay any more taxes, and you pass on generational wealth, and it protects your money, it protects you from the government or anybody else who would come against you, and you can protect your money forever. Is it worth it? I think so. You don't have to be rich to have one. Transfer your 401k into a fixed index IRA, be it an annuity or be it an account. Keep it, let it cook, let it grow. From the annuity, transfer it into a trust. What trust? Oh, Lord, there's a lot of them. Do you have a disabled child? It could be a special needs trust. Are you a member of a church? Are you a pastor? Are you a trustee? It could be a charitable trust. Do you have at least $2 million in assets or more? It could be a guarantor retained annuity trust. It could be just a basic living trust. I don't know what trust. That would take a phone call between you and I. We can talk about it. We can talk about how you can make these power moves. Once your trust becomes irrevocable, you have secured generational wealth for your family, just like J.D. Rockefeller. J.D.'s most famous quote: own nothing and control everything. You drive by gas stations that the Rockefellers own, and because it's in their trust, you don't know they own it. You picking up what I'm laying down? Because of the way their trusts are structured. You don't have to be rich. If you have a house, put it in a trust. There are many things that you can do with the equity in your house. You can write checks off the equity of your house and use your house equity to be your own bank. There's so many things you can do that you don't even know you can do, right? There you go. Third power move. All right, so listen. So the next step for you is to learn how to execute these power moves. That takes a green sheet appointment. It's going to take about 30 minutes, 45 max, on a Zoom call with me. And you're going to do a green sheet appointment. In this appointment, we're going to do some goal setting. We're going to find out how much money do you need coming in passive income and when. To sit down with a financial planner and do goal setting, they would charge you $5,000 or more. How to avoid taxes? What strategy? Is it a Roth conversion? Is it a trust? Is it an IUL? Is it a whole life? What tax-free strategy would fit your needs? How can you do that? That's worth at least $20,000, and I'm lowballing. Because if you eliminate the taxes from your retirement account, you could put an extra $100,000, $150,000 back into your bank account. But you would pay that broker at least 20 grand. Okay. How to turn life insurance into an tax-free IRA. What? You can do that? No, you probably can't. You know why you can't? Because you got the wrong agent. Your agent can't do it. You know why? Because his upline ain't going to let him. He's got to charge for that life insurance. So your cash value is going to be zero. Zero is not your hero. If the joker agent that you got can't take a commission cut to get you the cash value in your policy that you need, no, you can't. Flip Obama's slogan from yes, you can to no, you can't. You have to have an agent who's willing to take a haircut. Tell the truth and shame the devil. Hallelujah. That's me. That's the reason why I ask for referrals up front as a broker fee so that I can feed my mama and my son and pay the bills, okay? I'm the breadwinner. The broker fee is referrals so that we can take the commission cut and keep on keeping on. I hope you're hearing me. Some agents cannot do it because their agent portals are on lockdown. And they couldn't do it if they wanted to because the life insurance company, the IMO and all that, they're not going to let you do it. Okay? You have direct phone access to me. Look, I got to turn my phone off at 9 o'clock. I got clients texting me at 11, 12. I'm like, what's wrong with you? Why are you texting me? But guess what? I'm there for them all the time. My value to worth is at least $55,000, and I know I'm lowballing it. But what is my fee? 10 referrals. My coach would probably say, Richelle, you crazy. You need to charge. No, because the Bible says in the book of Proverbs, a good name is worth more than silver and gold. So if you tell 10 people that I am a good person to work with, there's going to be something called a critical mass. Or other words, in virtual language, I'm going to go viral, which is what's happening. I have so many people calling me, texting me, and booking me. I've got people on YouTube that I haven't even met from somewhere across the country booking appointments with me saying, Richelle, I've been watching your YouTube channel. I don't watch 4 videos. I've spent 6 hours with you. I'm ready. You understand? But listen, referrals are due on the second call. So the first call, you and I would talk. You will decide whether I like you. I will decide whether I like you. You will decide whether you like me. We're going to stare each other up and figure out whether we want to do business together. Then once we both make the decision, pow, there's an agreement, a spiritual, mental, physical agreement. We'll take a second call, and on the second call, I'm going to show you the money. We're going to take what we do for the green sheet. I'm going to show you the bonus money. I'm going to show you how your growth, and you're going to give me my fee, which is my referrals. And we are then in a fiduciary relationship. It's so nice. Okay? So put up your camera, take a picture. That's my QR code. Actually, I don't even want you, I shouldn't even put that up. I'd rather you go to Rhema, RHEMA, financial coaching. No, no, I'm sorry, Rhema, RHEMA, financialsolutions.net, and go to the bottom of the website. It says book a phone call. Just book a phone call. Let's get on the phone and feel each other out. Let me hear you, you hear me. Let me hear why you calling, what you're interested in. And then from there, we'll book a Zoom call. If it's a good fit, we'll take it step by step by step. This is not a one and done. This is a walk, not a run. Sound like a plan? Ooh, child. Well, Mr. Roosevelt, you left and came back. Here is your chance. Since you took time out of your busy schedule and you came back and pressed your way into this room, you get a chance to get some laser coaching. Now, this is the way we do laser coaching. You say, you don't do like they do in church when it's testify thing and you get the mic and she never wants to give up the mic. She telling her whole life story. No, 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 no. You're going to start with the question. My question is. Say my question is and then ask your question. All right. Roosevelt, did you enjoy that? Unmute yourself. Hi. Hello.
Yes, I did.
You did? Are you a real
Yeah.
person? You said, you all right?
No, I'm okay. I'm okay. I wasn't talking for a while. That's why my voice is kind of funny.
Ah, I
Um,
hear an island accent, a West Indian, African, something.
yeah, it was, and yeah.
I love that
Um,
sound. It's so royal and
it's
regal.
it's I think I have an internet issue. That's why I got
Oh,
disconnected.
gotcha, gotcha,
Yeah,
gotcha. All right, well, welcome, welcome. Is
thank
there
you.
anything I can answer for you?
Yes, definitely. I think
Okay.
while I lost connection, it's very interesting. I think we might talk in the past. For some
Mm-hmm.
reason, I lost your contact. I don't know
Oh,
how, and that's why I didn't go further. But I'm glad I find your contact again so we can
nice, nice,
move
nice.
further.
Okay,
Yeah.
okay. Did you have a question?
I think I have a lot of questions.
Okay.
But because you talk a lot of interesting thing that
Mm-hmm, mm-hmm, mm-hmm,
kind of caught my attention,
mm-hmm, mm-hmm,
Um, the title really interests me to be my own bank.
mm-hmm,
And since I know that I'm in business for a while and I know how hard it is for someone who started and would never have um, someone start it and then have everything established.
mm-hmm.
It's really hard, and then sometimes I'm thinking of giving up, but I say if I quit, that's mean I'm a failure. But if I keep going, definitely I'm gonna reach my goal. You know,
Absolutely.
yeah, and
Mm-hmm,
that's the reason I always trying to learn what's the
mm-hmm.
best way out there I can,
Love
work
it.
yeah, increase my
Absolutely.
money. And it
Yes.
seemed like I'm on the right path. You might be the right coach for me to help me
Well,
to
thank
grow my
you.
money. Yeah,
Yeah, thank you. Thank
I
you.
really enjoy the session tonight.
Thank you. Thank you. Thank you. Do
I
you
took
have
notes.
you took notes? Do you have my contact phone number?
No, I don't. I would like to
Okay.
have that again.
Okay. Tell me when you're ready.
I'm ready. I'm
Ready?
ready.
Okay.
Yeah.
All right. So my business cell phone, you can text me. It comes straight to my phone. So 240
Two, four,
467
four, 6, 7,
7397.
7,
Right.
2.
Text me and make sure you tell me this is Roosevelt. I was on your Be Your Own Bank workshop. So that way I know who you are.
Okay.
because I block
No
people
problem.
all the time. So, and I want to make
Okay.
sure we connect. Wonderful,
Yes.
wonderful. All right. Well, listen, I am looking on Facebook to see if there's anybody. Hey, Maurice, I see you. What's going on, Jeff? I see you. Anybody else have if you have any questions on Facebook, feel free to type it in the chat. Now is your chance. All right. And if even if you have questions later on, feel free to follow me on Facebook as well, Roosevelt. Just send me a little message so I'll know who you are because I don't just, let everybody be my friend. But if you just send me a little message and remind me that you are in my workshop, I will drop you and you'll get a lot of nuggets because I'm always, always dropping nuggets to my friends and family there and all over social media. All right. Well, listen, I want to end on a positive note. And even if you are not a Christian or whatever your faith is, I believe that this scripture is good nourishment for our souls. And it's a good way to think when it comes to being your own bank. And that's going to be First John chapter 3, verse number 2. First John 3 and 2, it says, Beloved, I wish or I pray above all things that you prosper and be in good health as your soul grows. All right. Love and blessings from Virginia Beach. And we'll see you next time. Bye, Roosevelt. Bye, everybody on
Bye.
Facebook.
Thank you
Talk
so
to you
much.
soon. Bye bye.
Okay.